Hi, everyone. Welcome to another episode of the Bitcoin Law Review with your host, Vays. It's been a little struggle rounding up the lawyers these days, but I was able to bring you the only, the lovely face, Sasha Hodder. Thank you for joining us on this episode. Adela may be coming by, and then maybe one or two others, but I have no idea, to be honest with you. How you been?
Oh, pretty good. I just moved to DC, so getting all settled in here. So that's been a little fun and taken me away from watching the news as carefully as usual this past week. So hopefully I'll have some good information for your listeners.
All right, cool. Yeah, we had so many topics on our last show, and I was joined by Bill from out in California. Eventually, David Silver came on, but we got into some of the topics, but not all of them. And I still have all of those tabs. So let's just jump right into it. We're going to try to cover as many as we can. We're going to stick to the topics that you are more familiar with, Sasha. And then if someone else joins us, then we will jump on to potentially other topics. Let's review last week. I mean, this was the really big news, and we'll probably pick it up from there. And then we are going to talk about Bitfinex and Tether a little bit. We're going to talk about some of the other legal developments that took place over the last week or so since, wait, I have to move this over to here. Okay, there we go. In case people join so that I know that they're here. And let's review this real quick. So it's already been over a month, and the SEC, God, the government works slow. So the SEC has come out with a framework for investment contracts analysis of digital assets. And investment contracts is just a legal way of saying security, right? So an investment contract is a security. It's a type of security, right?
Yeah, and I think it's important to note, so in the 33 Act, and then I think it was updated in the 40 Act as well, when they define what a security is, they have this big long list. It's like a stock, a bond. There's about 19 different things. An investment contract is kind of the catch-all for anything that doesn't fit into what they call the enumerated securities. So for crypto, the investment contract analysis is that Howey test. And I think through the ICO phase, everyone was really trying to find workarounds for that, so that it wouldn't fall into that category. But now the SEC came out with this framework, and it really makes it pretty difficult for someone trying to raise money, a central group of people trying to raise money to build a token, to not be an investment contract. So they created one new category in this notice where they called it an AP. So that's the person that's controlling the creation or issuance of the asset, or taking actions to support the price, like someone that has the ability to limit any supply, someone who could burn the token, something like that. And so that was the kind of thing they were looking at, of how who's controlling it. So that whole argument that came out last year in the summer around Ethereum of the sufficiently decentralized, I think people took that in, like the field or the attorneys out there in the space, some of them took that sufficiently decentralized statements to mean that as long as something is decentralized, it can either move from being a security at the phase of issuance into something that would not be considered under the Howey test. But this framework kind of rolls that back a little bit and makes it really difficult for anyone that's promoting or creating a coin to not be outside of the range that the Howey test can collect them into to make them a security.
Yeah, this concept of an AP, referred to as an active participant, is really critical. And like me being very familiar with many of these tokens, not the really obscure ones. And as I read this, I'm like, well, and I'm trying to and I'm thinking of all the possible tokens that this may not apply to. And I'm like, nope, I can state the I can make the argument that this guy is an AP. I can make the argument that that guy is an AP. Like the whole Bruce Fenton argument, I can make the argument that Bruce Fenton and Pepe the lawyer are APs because they were instrumental in getting mining onto their coin. They were instrumental in getting it on the exchange. And these are all the functions of an AP.
They are. I still think that that's a stretch to take a mineable coin, that there wasn't an actual investment of money into the coin. I don't think that would fall within this Howey test personally. Now, obviously, like we've had a lot of debate on this on our show, but I think it still only applies in this framework to coins that were sold through the ICO channels, not ones that were mined. But
okay, that's okay. We have very few mineable coins. The majority of them were sold through an IPO, including Ethereum itself. And yeah, so I found this interesting. And this was, I mean, this is way more detrimental to the ICOs, including Ethereum, than Heinemann's statements, what, a year ago now, that people took as so positive. And it was just a very interesting read. And all of these links are in the video description, guys, so I strongly recommend it. And like what I was telling, I don't know how much little details you remember, Sasha, but like I know Drew really broke it down with his big email. Well, like he broke down most of the stuff. I'm just gonna go through some of the ones that I kind of like, just to be clear. And he did focus on Ethereum, saying that a lot of these things are basically stating that Ethereum may still be a security.
mm-hmm. Yeah.
And yeah, go ahead.
Just from a like political side, I think it would be a pretty big shocker if they came out now after Hinman's speech and said that Ethereum was a security, because they had gone through all that analysis last year and saying that it was that alone was sufficiently decentralized. And I know you guys and a lot of other people, and I tend to agree with your conclusions on that around Ethereum, that if you look at it from the AP argument, you know, they still have, even just someone taking actions to get the coin listed on an exchange would make them one of these APs, active participants. So it's, yeah, definitely you can make the argument now with this framework that Ethereum would fall into it. But I think from a practical standpoint, we're not going to see that happen.
Yeah, and the one that I was thinking about the most as I read through, I remember the back end of it, was actually Binance. And like it just checked off every box for me. Like no matter how you look at it, it's a security.
Mm-hmm. Yeah, Binance is like a unicorn out there that they haven't had any regulatory concerns yet. It makes me wonder, you know, are they they must be working with the regulators in some way to get this free pass.
Yeah, and speaking of Ethereum, oh, did I grab that link? We weren't really going to talk about it, but they like changed the wording of what Ethereum is. It's like, and now all of a sudden it's money now. Like,
yeah, it's no longer
like what?
Yeah. Yeah, that was do you have any idea why they did that? I haven't been following them that closely lately, but it's pretty odd to change that word, you know. And they took off that it was unstoppable applications, and even the idea of it being an unstoppable application is kind of what led I think regulators to think that they were sufficiently decentralized, because the idea that no one could stop this, it's been released, the protocol's out there, people can do what they want with it, whether or not Vitalik, you know, gives them a go ahead. But then since then, it's been, we're seeing a lot of changes flowing straight from their, you know, organizational governance structure or whatnot.
Yeah, you see the difference, and once again, like the difference with Bitcoin and the difference with Ethereum, the big difference, right, is that Ethereum.org is actually controlled by a centralized organization that is responsible for Ethereum. So anything that is said on Ethereum.org is like a centralized entity in charge telling you. Bitcoin doesn't have this. In fact, Bitcoin.com is literally like a fake Bitcoin site, right? And Bitcoin.org is a pretty decentralized, somewhat decentralized website. I know and different people have admin rights to it. Like, but this is a centralized version, and I find it interesting. And why would they want it to be money? Like, isn't that bad?
Yeah, well, I mean, the way that FinCen looks at things, they treat this just like money anyway. So there's really no distinction. At first, people thought, I think, like, oh, it's a coin or it's a token, it's not money. And that's a big distinction so that it doesn't get caught up in all the money transmission rules. But now, since 2013, that it's actually been that any kind of like a convertible virtual currency is treated like it's money.
So this
Sorry.
Oh, let's hear Mr. Polly. He did a great job on that speech.
Yeah, I tried playing this last time. I thought this part was muted. I tried playing this last time, but for some reason I couldn't get the audio to work. But here is Stephen Pally, who wasn't unable to join us for this episode as well. But here is Pally discussing this, and I'll play this, and then we'll move on to the next topic.
SEC commentary. What does it mean for all the ICOs out there? Are most of them securities? Are they were they done in a kosher manner, or is this going to make life difficult for a number of issuers?
So the first thing I read when I read a document like this is the footnotes, and it must be my legal training. The first footnote in this document says, I'm paraphrasing, this is not a rule, this is not a regulation, this is not a case. It doesn't supersede any existing case law, any existing rule. It's our view, but it's not. I think the language is. It also says the commission has neither approved nor disapproved its content. It's a memorandum that reminds me of something that a law firm might write its client if a client asks for general guidance about whether or not an ICO is a securities offering. I don't think it changes the law in any meaningful way. It does have some impacts, and I'm glad to talk about those in greater detail.
All right, well, can you talk about that impact? Because, I mean, it did sort of give Turnkey, I guess, a very narrow sort of path of how it can use these coins, and that seems to be sort of why this was approved. What are the implications of that?
You're speaking of the framework, or you're talking about the no action letter response?
I'm talking specifically about the framework.
About the framework? Well,
Yeah.
Look, what it does is, I like the way it begins. It begins by saying something that a lawyer might say to a client. So if you're thinking about doing an ICO, you need to worry about US federal securities laws. And if you're thinking about US federal securities laws and you're thinking about a digital token, you need to consider whether or not the digital token that you're offering is an investment contract. And under US law, and it's been the law in the United States for more than half a century, you follow something called the Howey test, which is named after a case. And it's a three-part test. And if there is an investment of money in a common enterprise with the expectation of profits solely from the efforts of others, I'm paraphrasing, then you have an investment contract, and then you either have to file with the SEC or fall within an exemption. And what this framework does is it walks through essentially, it doesn't walk through the case law exactly, but it walks through that analysis in a very mechanical sense, trying to apply it to digital tokens. Now, one of the stated benefits of blockchain technology is the notion of decentralization. Yeah. So what this does is it looks at things that might cause the SEC to view something as being potentially decentralized enough to not be a security under the Howey test.
And that was something that we saw applied to Ether in particular. But Stephen, I'm interested in basically whether we're going to see a rise of ICOs or not. It basically is killed off in initial coin offerings because everyone was worried about whether or not they'd be deemed securities or not. When people are coming to you looking to do an ICO, are they trying to be regulated? Are they trying to be securities, or are they just trying to avoid it?
More so now than 2 years ago. I mean, 2 years ago, you get a phone call and somebody would want to, they would have an idea that it would be nice to help pay for a marmot farm in British Columbia. And so they wanted to sell marmot coins, but the problem would be the marmot farm didn't exist yet. There was no technology. And what they were essentially planning on doing was raising money to sell a token and then hopefully 10x or 100x a token on an exchange. I'm not getting those phone calls now. And you'd have conversations where you say to people, look, you should consider securities laws. And they'd say, if we wanted to follow securities laws, why would we do an ICO? I don't think we see that now. What's interesting is at the same day that this framework was issued, the SEC issued a response to a no action letter request, and dealing with something called, forgive me for looking down, Turnkey Jet. And in that case, in that particular instance, agreed that it basically agreed to a no action request in the case of a digital token, basically an ICO. And what's interesting about that, if you read these two things together, the SEC in this particular case has indicated what it will take potentially for something to be, on the one hand, a digital token using an ICO model, and at the same time, not an investment contract.
All right. So that was it. And here is that no action letter for Turnkey. And I don't know if you heard my comment on this during that last show, Sasha, but when I was reading this, I wasn't really sure what this was regards to. I'm like, oh, okay, I see something.
Yeah, you thought, I did hear that. It was funny. You thought it was for a real ICO, and you're like, oh, they're missing the whole point.
Right.
Yeah.
Right. So like, you guys have to read this. The link is in the video description. And like when I read this thing and I'm like, okay, the SEC has turned Turnkey. This is how I was reading it. I didn't realize like exactly what this was. And I'm like, oh, looks like the SEC has said that this company has to do the following. And it says the TKJ tokens will not use any, TKJ, the company, will not use any funds from token sales to develop the platform of TKJ. Okay, so there goes Ethereum. Ethereum clearly used the proceeds from the Ethereum token to develop the Ethereum platform. The tokens will be immediately usable for their intended functionality. That means your platform has to already exist. TKJ, the company, will restrict transfers of tokens to TKJ wallets only and not to wallets external to the platform. And I'm like, well, that means this token can't be traded on non-KYC'd exchanges. In fact, it may not be allowed to be traded on exchanges at all. And everyone has to have only one possible wallet controlled by Token Jet company. And then it's TKJ Token Jet will sell tokens at a price of $1 per token throughout the life of the program. So I'm like, well, wait a minute. So now there is absolutely no speculation in the price of this token. It will always be $1. Token Jet offers to repurchase those tokens for less than their worth. So they can buy them back at any time for less than $1. The token is marketed in a manner that emphasizes the functionality of the token and not potential increase in. So no one can even mention, no one associated with the company can even hint at the idea that the value of this token will go up. And like I read this thing and I'm like, why in the world would you do an ICO? Like this is the complete opposite of what people do an ICO for. And this makes total sense actually, because the Jet company needed an internal token so that they can take payment from their clients when banks are closed. And this makes total sense. This has absolutely no speculation. This is pretty much kind of like, if the only way to buy from Amazon was through a bank transfer, but banks are closed on the weekends, you have a problem because now you have to wait till Monday to buy that deal from Amazon. So the only thing you can rely on at that point is Amazon points if you have those points in the system. And even Amazon points are way more useful and anonymous than these tokens, because Amazon points, they could be on gift cards, they could still be kind of anonymous. And this goes back to that whole framework. And when I was reading this framework, I'm like, okay, the SEC is trying to make sure every one of these freaking ICO tokens gets labeled as a security, but at the same time, let me not have Apple call us, or let's not have Amazon call us, or United Airlines call us. Did you just make our airline miles a security? And now we're about to send our lawyers over to your office, right? So I think this was just a way to make sure that the current loyalty programs remain non-securities, while all of this nonsense that they think is people think is a blockchain is securities.
Mm-hmm. And I think even when Clayton came out with his, prolific, all ICOs I've seen so far are securities speech, last December 2017 or maybe early 2018, he did say something like, well, if it's a book of the month club and for some reason using tokens is more efficient, fine. And then in the framework, they looked at it and it's like they really are allowing for people to use tokens to buy goods or services. And in a later speech, he talked about it like a Broadway show. So one of the things they said, that they're looking at for consumptive aspects, like if you're making a consumer token, it really might be outside this Howey test framework, but it has to be that the price has to bear a strong correlation to the goods or services that you're buying. Or if you set it at $1 and accept it as $1, that would get around that too. And then the trade quantities are not they have to be proportional to the amount of tokens people are using to buy the goods or services. So for instance, with this Turnkey Jet, if they let the price fluctuate and they let people buy thousands of tokens, but when they looked how many people were actually using them for the jet, it was only a very small percentage of the overall quantity of tokens, that would be a red flag. They're allowing people to create tokens and use them for goods or services, just not for any speculation. And they don't want to see them being traded on the exchanges. So basically they're stripping out anything that a lot of traders were finding fun about the ICO market, I think. And just making it like what you said, some kind of rewards points.
Yep.
Mm-hmm.
All right. We had another the latest story. We're gonna skip some of the other ones that we discussed back in that last episode, but we did have more crackdowns. This is that's something else. Here it is. So this was the SEC has suspended trading in crypto securities for Bitcoin Generation Exchange. I'm actually not familiar with the Bitcoin Generation Exchange, nor this case. I don't know how familiar you are, Sasha, with it. Maybe you can and there's not much information in the article either. It's like nobody knew this exchange even existed.
Yeah, I think they were trading as a pink sheet stock. So it wasn't like a typical Bitcoin exchange action, but I read the notice the SEC put out, and it's very well summarized by Bitcoin Magazine here. But basically, just this company did some kind of bond with a UK investor, or something happened with this bond, and they gave what looks to be what the SEC thought was false information about their price, their valuation, probably how many people were using their exchange. And maybe used some of that false information to secure a good interest rate on the bond or something like that happened. And then the SEC halted trading. And, it's only halted till May 10th until they can answer the SEC. But then their attorneys responded to it, they made a press release and said the SEC was being unreasonable, that the SEC should have contacted them first asking for the information. I guess there was no warning to them that this trading halt was going to start. And then they said basically that the amount, so that they said the SEC, now that trading has stopped or been halted, the SEC wants all the information about that bond that they acquired from the United Kingdom. And they want to know the amount of this company's outstanding common stock. And they want to look at all the promotional activity that this company has done to correlate the value of their company versus what they're putting out there. Because it sounds like there might have been some, false information being supplied to people. And then the company itself says, oh, we're so committed to providing shareholders, all this transparency, and we're disappointed with the SEC. This is surprising, very prejudicial. Mr. Hadjeev is their president and CEO. And I went on their website, and like it was a lot of I couldn't really even tell. Like I was just doing this quickly right before the show, but I tried to set up an account, and I couldn't see how to set one up on there like very easily. You know, if you go to a normal, you know, Bitcoin exchange, it's pretty easy. You can see how to use it, but this one just had a lot of marketing material, more so than looked like it was trying to onboard users. So we'll see. Usually when there's smoke, there's fire. So if the SEC thinks that they were making false statements, we'll probably find out they did. But
traditional companies on the pink sheets, you know, the crypto ICOs before the invention of crypto ICOs.
Yeah, exactly.
So
I don't know why a lot of ICOs or these ones doing security tokens don't just try and list on the pink sheet rather than doing Reg D or like trying for these A pluses. There's that rule that it's not very hard to get on pink sheets compared to some of the other channels. So I don't know why people aren't exploring that more.
Right. So what you guys want to do now is you want to go and take a look at the half a penny legal stock that was trading of this company on the pink sheet exchange.
But if you can get a quote on it, then the company supplying the quote is breaking the SEC's laws as well. But no one's allowed to quote it while it's halted.
Well, I can see the last quote.
Oh yeah, okay, but it shouldn't be any active quotes.
$0.09. That was the April 26th quote.
Mm-hmm.
All right. And let's see the history of this stock.
Oh, that's not a great looking.
It traded as high as 32 cents and is now down to 9 cents. And it's been around since the very top of the market back in November. It started on the pink sheets. You can see the 52. That's the 52-week average. That's the daily range. I don't see the high. That's okay. Oh, 52-week average. Okay. 5 cents, 20 cents. There you go. Traded as high as 20 cents in the last year. And I've never heard of this exchange, the Bitcoin Generation.
Oh,
they're an exchange, right?
that's what they say they are, yeah.
Okay.
Curious
So
how much they have, but.
And their stock is worth 9 cents. So to me, when I see this, right, it's a pink sheet stock, it's worth 9 cents. And then someone is like holding this, like bag holding this stock. And they're like, this is the next CME. This is the next New York Stock Exchange. This is the next NASDAQ. This stock is going to take them all over. The person that says that is the same person that says, my shitcoin is better than Bitcoin. That's what the pink sheets are. Okay. Just so you guys know. Okay. And let's, I guess that's enough securities news. But as I think this is going to be my new staple, I don't think I'm ever going to close this one. Thank you so much, Horsebox, for this amazing sound clip. And I think this will be like back in the day, I used to watch Jon Stewart for a little bit, and he had his moment of Zen. This is going to be my new moment of Zen. Anytime we talk about security laws, let's have a listen. But this will probably be a daily, a automatic staple for all Bitcoin law review discussions that have to do with security laws.
Let's hear it.
Yeah, I had a question. I appreciate you guys making this happen and you being here, Derek. But the question I had, I've been going through ICOs and researching a little bit. And how safe are we here in the U.S. Not being an accredited investor investing in this ICO?
How safe as you or for us?
For myself.
You guys are fine. I think one thing I've learned a lot in the industry, especially since working in the finances, as long as the people make money, like nobody complains.
Isn't that amazing?
Mm-hmm. I think that he's not alone in that sentiment either.
Isn't that amazing? So there it is. The U.S. investors are perfectly okay investing in an ICO as long as everybody makes money. There's no problem. All right. Okay. So next topic. You know what? Let's jump right into. I wonder how many viewers we have.
Oh no, what's this one? Okay, okay, games. Yeah, those.
Actually, no. What is this? Oh no, this is the FinCen stuff. We'll see if Adela comes. That's more her domain. Let's go to Bitfinex. Let's see what's going on. So, man, these stories just gets weirder and weirder. So Bitfinex gets a subpoena from I think it was a subpoena from the New York Attorney General, Letitia James, and where's the document? Here's the nope, that's a different document.
It's been quite a few now. Yeah, they're going back and forth pretty quickly.
Yeah, here's the document. And we've looked through the document. I mean, I listened to Tyler Jenks's video. I didn't have time to read through the document, but I listened to him break down the document, and then we talked about it. Connections to Quadriga CX. So basically, here's how I understand the situation, and everyone keeps trying to spin it. And I don't understand why there are so many Bitfinex defenders out there. I don't know how much Bitfinex stock they're holding. I mean, they have their equivalent of an ICO token. But here's my understanding of the whole mess. So Bitfinex, the company, and Tether, the company, they may have the same owners, but they're different legal entities. Both of these legal entities have filed paperwork to operate in America. The reason why companies file paperwork to operate in America is because that's where most of the money is, and that's where they're making most of their business. And they have stayed away from the state of New York, but apparently they don't do very good KYC AML. And the New York Attorney General still sees it as people in New York are doing business with Tether and Bitfinex. Now, here's the thing, and this is where your problem comes in. Because Tether can be held anonymously in an unregulated shitcoin exchange, no matter what happens, the New York Attorney General can go after you for holding Tether, because you can claim that US people are holding it because you don't know who's holding it. So all they have to do is have a New York State resident, an agent, a New York federal agent, go convert some shitcoin into Tether, hold it on your exchange, and you're done. Because they can have a claim that you're not taking the measures to deal with US customers. And it would be incredibly simple to do. It's actually very simple. So anyway, they're supposed to be two separate entities, Bitfinex and Tether, but they have the same owners. They have the same upper corporate structure, probably. And at the end of last year, Bitfinex isn't able to make good on the withdrawals to people trying to withdraw money from Bitfinex. The reason why they're not able to withdraw the money is because Crypto Capital, some somewhat shady middleman that we now know, and there have been articles written about Crypto Capital years ago, it's just nobody paid attention. It was like one of those companies behind the scenes that was providing banking services for Bitfinex. They were processing their withdrawals, and Crypto Capital was just not giving them the money. There are some internal chats between people of Bitfinex and people of Crypto Capital, where it certainly didn't sound like in that chat that there was any kind of legal action by the governments. Like those chats didn't reflect that. Now it's possible we don't have the preview of looking at all the chats. But in any case, Bitfinex is not getting its money from Crypto Capital. So Bitfinex has two choices. Either they start another panic, or they borrow the money from Tether to repay people of Bitfinex, and then they plan to, use profits of Bitfinex to eventually refill the backing of Tether. The New York Attorney General had a problem with this, saying you're not allowed to do that. You're commingling funds of two different companies. If you're saying Tether is supposed to be fully backed, it was supposed to be fully backed. Now the thing is, it looks like Tether was fully backed until Bitfinex didn't have the money. Now Crypto Capital is saying that the money was seized by the governments of Poland, Portugal, and the US. The New York Attorney General is saying the funds certainly weren't seized by the US. We have no idea about the rest. There was some news out of Poland around the time that something was confiscated, but though that news is somewhat obscure. Also at the time, Bitfinex came out and said that their funds were not confiscated by Poland. So either they lied then or they're lying now. They're lying based on when it's convenient. Either way, this is bad for Bitfinex. That's basically the short rundown. I don't think the 850 million has been accounted for yet. And it's still very debatable if the entire 850 was seized, if any money at all was seized. Looks like Poland seized something, but certainly not up to the tune of 800 million. And the story still keeps on coming because now people are actually investigating the story of crypto capital's dark past. And well, yeah, once you shine the light under the rock, you start looking into stuff. I have not. I think I read this article a little while ago. Sasha, you recently did a podcast covering this entire mess, and let us know what you think. I mean, I'm sure this article from Frances Coppola is amazing because she hates crypto and capitalism, like I mentioned before. So I'm sure she did a very good job of pulling out all the cockroaches under this story. Go for it.
Well, yeah. So yesterday I actually did a podcast with Amy Castor, who is a phenomenal blogger, independent blogger, and she's been covering Bitfinex since its original hack, and she's been keeping a timeline of everything that happened. So it was really interesting to go through the history of it. Like, so first they had the hack for around 120 or in the 100 million range, 100 to 200 million, and they created their own coin to kind of, give people some value back. And then Tether was created. And so there was no accounting done properly in her opinion. And, I think, she based that on doing quite a bit of research into it, that when they made their own token and then gave the Tether tokens, like they just took a write down across the board of 30% of everyone. They didn't just, how like some exchanges, if they get hacked, that only the people that had the coins that got hacked would suffer. But this way they just applied that hack to all their customers, which if they were regulated as a securities exchange or a commodities exchange, you can't do that. They just took some people's money and that didn't lose money and made them lose 30%. So that right there was kind of the first of a just operating with whatever they think is right, but not following any laws. And then created this other coin, gave that to people, but the other coin went up in value, and it seems like everyone was actually made whole through that whole bull market phase. So people weren't like the guy on that video, people were making money from it, so no one was complaining that their accounting might not be as pristine as the generally accepted accounting principles. But then they lost their banking relationship with I can't remember what bank. I think it was Wells Fargo. Yeah. So
Wells Fargo was Noble Bank. I mean, they've been like a banking hot potato forever.
Yeah. Then they were with Deltec Bank, then HSBC in Taiwan, and then they opened this private account, the Global Trading Solutions, and that Global Trading Solutions is owned by the same people that owned Crypto Capital, who in the legal thing from the New York Attorney General, it said that they're friends of each other, or something. And they gave $1 billion of their own clients' money to Crypto Capital or Global Trading Solutions with no contract in place. And could you imagine like an actual regulated stock market just handing over $1 billion of its clients' money with no legal tie to get that money back? And then in the conversations that were shown, like, one guy, his name was Merlin, who we think is probably the chief financial officer of crypto or of Bitfinex, telling someone named Oz at the Crypto Capital, who we think is probably the brother of the woman, the Israeli woman who got arrested. but basically saying if you don't give this money back, Bitcoin's going to go under 1,000, like creating all this urgency. And we're just not sure what happened to that 850 million at this point. Like, did crypto capital just steal it? Or did they get hacked somehow? So I think what the New York Attorney General had a big problem with is, then, like you said, they do what they want. They don't follow any, actual laws on how you're supposed to account for things. And, they are trading in securities and commodities, and they do have New York residents that are able to get on there and buy it using a VPN or whatnot. It still happens. So it was brought under this Martin Act, which is the most expansive of the state's blue sky laws that exists, and it actually strips people of a lot of their constitutional rights. If they're being charged with this Martin Act, they're not allowed an attorney, and they're not allowed the right against self-incrimination. So it's very, very serious act. It was created in 1921 so that the New York could regulate Wall Street, but it was kind of a wink and a handshake idea that this would never be used. And then it started, the New York Attorney General, I think, put its first case using this act in the 90s. And, that's what this is coming down under. So they found the crypto capital guy, Reginald Fowler, who actually was at one point invested in one of the football teams. And they took him off the football team because they noticed on his resume he had already had something like 30 arrests, and he just had a really long record of not arrests but lawsuits. Like, there was a lot of shadiness with him noticed then. And then when he was arrested, they found 14,000 worth of $100 counterfeit bills, and a way to make these counterfeit bills. And they think he's a huge flight risk because he's got so much money around the world that they detained him. But he's being charged with bank fraud, and that charge alone contains, like, it's a 30-year jail sentence with it. And then he's also, I guess, Crypto Capital purported to have their money service business licensed through FinCen on their website, but they never had that. So it's also, to conspiracy to, or actually transacting without the money service business license, and then conspiracy for all these other charges as well. So it's pretty serious charges against Crypto Capital. And I guess when Bitfinex responded to this, they said, we did update our website saying, so part of the fraud against Bitfinex is that they said one thing and did another. They told clients they had 100% backing of the Tether, reserves. And then they actually went and dipped into the Tether reserves. And they said, well, we updated our terms of service. Bitcoin Magazine printed about it. Like, that was, made public, but they only did that, after they went and dipped into the money. So that action is not, you have to let people know what you're doing, give them an opportunity to take their money back if you're going to make a big material change like that, and then do the action. But instead they were trying to cover it up and, released it in a really sneaky fashion of just updating a few words on their terms of service after the fact. And they're also saying that nothing that they're selling, or as specifically the Tether, is not a security or a commodity. So this Martin Act shouldn't apply to them. They have really good lawyers. If you read through their own responses to things, I'm always, I think that, I guess they can afford, the best lawyers out there, some of, but I don't think it's going to get very far, because I think it's easy to make the argument that Tether is either a security or a commodity. So yeah, that's kind of what I know about it.
Yeah, no, I think making the case that Tether is security will be difficult, because you're not expecting Tether to rise in value, right? Like, no one is holding Tether. No one's investing in Tether with anticipation of profit.
Yeah, but I think it's going to fall into something other than, how we were talking about that list of enumerated securities. Anything that's securitized against something else creates a security. So it wouldn't be the Howey test that it would become a security through. It would be one of the other ways. It's like a securitized asset. So even if I took a car and I sold you shares of the car that were back to the car, a car itself can't be a security because it's a physical good. But if I make some kind of swap on the car, that creates the security. So I think that's how they're going to say that Tether would be a security. And we saw a little bit of guidance on that come out from, oh, what's her name? It's someone at the SEC with a Polish last name, Christo, I'm going to mess it up, but they put out a little bit of a notice, well, a firm notice on stable coins that some of them could be considered securities. And I think
I saw that. It was in one of these, but I might have closed it already.
Yeah. But I think they can say it's a commodity too.
There we go. I got too many tabs open.
Yeah.
Valerie.
Yeah, Cesar Panic.
Yeah, God, I can't pronounce that. Okay. Yeah, so hey, since we brought up securities once again for a second, I just want to clarify. There are people in the live chat that seem to think that IEOs are different than ICOs, and the Binance is not a security because it's an IEO and not an ICO.
Well, they did an ICO first. Like the Binance token was clearly created from an ICO. Now they're doing something separate, this initial exchange offering, which is also what Bitfinex is trying to do to raise their lost money again.
But wait a minute. An IEO is just an ICO specific to a subsector.
It's definitely a security. Like it would fall under all the same ideas.
Right.
How we test.
Right. It'll fall under the same bucket of are you or are you not a security? Like that doesn't change. In fact, you're almost certainly telling them that the purpose of this thing is for speculation, because it's by exchange for exchange. Like what else do you do on an exchange than to speculate? Like it should be even easier to classify an IO, at least with an ICO and the Mermaid Farm example. You can kind of make the argument that the Mermaid needs a token and it's not for speculative use. Yeah. I have no idea how the hell you're going to make the argument that an exchange token is not for speculative use. The whole point of an exchange is to speculate.
Yeah, I guess they can make the use of like, oh, the same as the airline tokens or something, like this is going to give you lower commission. This is going to give you like preferred pricing or something like that. Or it lets you sweep your extra coins. Like if you have fractions left after a trade, you can sweep them into that type of, I don't know. Maybe I haven't looked into the IEO.
Good luck with that. If they pulled that off, that means the SEC is like incredibly dumb.
I don't think, based on that framework that the SEC put out, like it's very clear they don't want speculation and they don't want things that can fluctuate in price. The only thing that you're going to be able to do with a token that's not going to fall under the securities laws is use it to buy some good or service and actually receive that good or service from it, not not any speculation, no trading. They look at how many if the number of tokens versus the number of, like if you're selling movie tickets with a token and there's only 100 movies showing and then there's 1,000 tokens being sold, that will cause a discrepancy for it. Like they want it to just be used for the purpose of buying a movie ticket. So these exchange ones, yeah, it's and I think it's pretty ballsy of Bitfinex to go ahead and try and do this unregistered security sale in the midst of all of it. Like it's just, they've got a lot of yeah.
Hey, desperate times are calling for desperate measures. They already know they're probably going to prison. What's another security charge on top of it?
Mm-hmm. Yeah.
All right. Other topics. So wow, I have like so much. I have to go through it. What do we got here? Oh, do you know anything about like the bills that Congress is trying to pass on this?
I kind of like one of them. Everyone has been talking really badly about it on Twitter when it came out, the Taxonomy Act. But and it's been a little while since I looked at it, but it puts a really good way of doing the taxes. It's the way it handles the securities laws, I think is a little far-fetched, and they probably should have separated the two out so that we could maybe get the tax one through, even if like they want to basically like reduce the rules for accredited investors, which I think makes sense. I like it, but I just think politically, like it's a long way from passing. But the tax side of it, they want to get rid of like-kind trading, and there was all kinds of stuff in it from the tax side that was really positive. I think they would create a de minimis amount, so anything that you're doing under $600 wouldn't be taxed. So it would make Bitcoin a lot more usable for spending on coffee or things like that. You wouldn't have to go back and do these ridiculous calculations. But
yeah, no, so that's pretty good to hear. Oh, here's our next story. This one is new. Well, not this part, but Craig Wright, our resident fake Satoshi, first tried to go after a cartoon cat, then went after Peter McCormick, who published his response on Twitter. I wonder what is going to happen with that lawsuit, and ended up getting his coin delisted from exchanges like Binance. Oh yeah, it's my Crypto Skin episode. And I think we already played that. So let's, what is this? Oh, it's one of the books. Okay, so let's talk about Craig Wright a little bit. So more revelations came out. For some reason, this script, I guess that this was the legal document that made Jeff Garzik got a subpoena to be a witness. So that kind of sucks. So here is a Reddit post. Craig Wright just purposely submitted a provable fake email into evidence in the Kleiman case. Man, the Kleiman case is so fascinating. Like, it's not an in-person trial, right?
I don't think so.
If I lived in Florida, I would have loved to attend that. But I mean, the Kleiman case is fascinating. A lot of lawyers can't talk about it for obvious reasons, as they're involved in this mess. But and Craig Wright has now been, it's been stated by the court that Craig Wright has to present evidence that he's Satoshi, right? Craig Wright ordered to list Satoshi's Bitcoins by the Florida court. So what do you think happens now?
I don't know, because he's getting sued in this, so it's not like he can just drop the lawsuit, and walk away from it when he can't do this part of it. Either he, and I don't want to get in trouble saying that, this is my opinion of what he will do. I think he'll either try and put in some fake information, like not move the coins, but like show the address to the coins and say, oh, these are my coins in this blind trust. But when things are in a trust, it has to have a trustee. So the court its next move should be to go to that trustee and say, tell us about these coins, and who controls them, how much are there? Because if Craig has them, it should be 1.1 million Bitcoins. And, I think that's 6.19 billion or something was what I read. And he claimed in 2011, he moved all of these that, these are Satoshi's coins, like the real Satoshi, but Craig is claiming that he moved them into this blind trust. And so now a trustee would be able to be subpoenaed to say, yeah, either they exist or they don't, and either they're under Craig's control or they're not. And it should be pretty easy to prove. So that has to happen by May 9th. So 2 more days until we see his next move. But I really think that he's such an egomaniac. He might just, we've seen so many false documents from him already that he might just put a false document into the court, and then, there'll be another big controversy about that. But
how illegal is that?
Oh, I think it's pretty illegal, but he's he's such an egomaniac. He seems to think he's like above all the law, but
yeah.
Maybe he, that's just my thoughts of what he might do. Otherwise, he's just going to have to admit, I don't have control of those coins. And if he were following the law, if he doesn't have control of them, he'd have to let everyone know at this point.
Yeah. See, this is why a normal person doesn't want to claim to be Satoshi, because then someone can sue you for stealing their Satoshi coins, right? So Kleiman is dead. His estate is suing Craig Wright for stealing Kleiman's 500,000 to 1 million Satoshis. So basically the Kleiman's estate is claiming that Kleiman was Satoshi, but Kleiman is not alive to, prove or deny that he was Satoshi. And we don't know, and the court can't figure it out. And it's possible that Kleiman family is wrong, and Kleiman never had the 500 to 1 million Bitcoin. But Craig Wright, the fake Satoshi, is claiming that he is Satoshi. So now he has to prove that he is Satoshi and that he has those coins. Or he has to, or in order to get out of this court case, he has to somehow prove that Kleiman didn't have the coins, which is incredibly difficult and probably impossible. And he's got a problem. If he proves that he's Satoshi, which he can't, then the Kleiman camp can try to prove that he stole the keys. And if he wants to get out of this lawsuit, he has to say that he's not Satoshi, which he's not willing to do.
And it's funny how he's tried to go about, first he was saying it was an undue burden to do it, and then he said something else that made it impossible because of the blind trust, like that barrier. So then the attorney responding was kind of poking fun at him within their, it's like nerdy, poking fun, but saying well, which one is it? Is it an undue burden, which, the whole case turns on that information. So you can't claim undue burden, or is it an impossibility, which is what he's saying now due to the blind trust. And then they went through all the reasons why it wouldn't be an impossibility. So it's a fun one to read.
Oh yeah, that's right. I remember this. I can pull it up. This was I thought this was this was a post. Yeah. So this is what looks like what Craig Wright was doing, or others. I remember this. Someone actually asked me about this. So people were looking for mined coins between 2009 and 2013. So if you have access to a wallet, but you've moved the coins out of that wallet, so the wallet doesn't have any coins, someone is willing to buy them from you for a good price, I might add, just to have access to those old keys and your old passwords, just to prove that, yes, I used to have these coins and I moved them out. Yeah, so there it is. So paying $5,000 for old mining wallets that mine Bitcoin, pre-halving, looking for at least 150 Bitcoin in the same address. They want the wallet.dat file or the raw private key. Now the wallet could be empty. The wallet doesn't have to have any Bitcoin in it. What would the benefit
be to getting that? Would they get forked coins or something that might have been associated with it? Or why would someone want to pay $5,000 for that?
Well, there's only two reasons. One is the potential for those forked coins, but no, you wouldn't get them because it's where you wouldn't get any forked coins from that. It's where the coins are at the time of the fork. Yeah. So only if the coins were still in that wallet at the time of the fork and they were never forked. That's the only way you get the forked coins. So you're not getting any forked coins out of these wallets, almost no chance. It's basically to kind of prove that, hey, I'm Satoshi, or it's proof that, hey, I was in Bitcoin in 2009, you should listen to me, right? Because a lot of the people here, and not here, a lot of people in general are blind followers, right? So if some guy shows up and says, I was here in late 2009, that means I'm smarter than you, and you should listen to what I have to say about Bitcoin's future, and I can prove I was here in 2009. I can sign a wallet.dat file from 2009. It's basically you're buying historical reputation.
Mm-hmm. It's like that guy. Did you meet that guy? We were at that conference you and I were both at last year in Miami in May. There was a guy going around saying he was, I don't think he was saying he was Satoshi, but like he was doing some kind of Satoshi school and saying he was a like core dev, but he actually wasn't. And he had all these really nice Bitcoin pins and stuff. I could picture him.
Is it about Jorg?
Yes, yeah.
I think I'm gonna see Jorg. Yeah, I think I'll be seeing Jorg. I never had time to like look into it. I think he's gonna be in Malta. I'm going to Malta next. Yeah, Jorg of the Satoshi School. Yeah, I have no idea what the hell is going on there. But yeah, he likes to insinuate that he's Satoshi as well. Everybody wants to be Satoshi. Oh, God, this is so like you don't want to be Satoshi. Trust me, you don't. That's like the worst. That's like the worst thing to be. Especially look, if you are Satoshi with 1 million Bitcoin, it's okay. But if you want to be Satoshi without the Bitcoin, it's like the worst thing in the world.
Yeah, yeah.
Anyway, all right, Sasha. Anything else you want to discuss? I mean, we had like a giant thing of topics, but
well, I guess just one other quick thing I forgot to mention about Bitfinex that that Amy was really adamant about yesterday was the fact that it's trading at a premium. A lot of people are looking at it thinking that it means that Bitfinex is just all good.
Tether or the Bitfinex security the Bitfinex token they made up, or Tether?
Bitcoin itself is trading at a $300 to $500 premium.
Oh, Bitcoin on Bitfinex. Got it.
And so a lot of people, I guess, are interpreting that to mean that everything's all good over there. But if you look at the stats before Mt. Gox or Quadriga went under, they were also trading at a premium, and people are paying more so that they can get off the exchange. That's what's happening. It's not a good thing that they're paying a premium. So people should probably, you know, if you are able to get anything off those, you know, out of Tether or, well, I don't want to give advice on stuff, but I think it's like close to imploding is what that kind of means. The fact that people are paying a premium there. So.
Yeah, people have been paying giant. Oh, we got our resident ambulance chaser in the house. Hold on.
Let's hear about OneCoin.
Oh yeah, Mr.
People used
Silver.
to ambulance chaser. I was offended. Now bring it on.
Their scam chaser.
We got Mr. Silver in the house. Hey man, you've been busy this week, filing more cases, man.
I got to keep it exciting before consensus. So at consensus, I could tell people I'm working.
Hey, the document you posted in our group, is that public?
That's public.
It is.
Beautiful.
It was a very well written document, Mr. Silver.
That's all Miller. Silver has nothing to do with the actual intelligentsia of this place. Silver is just a cute looking face who doesn't like shaving and wears t-shirt and jeans.
All right. So is Ruja still in prison? Dr.
Ruja. Still in jail. But wait, I just want to talk about what Sasha said right before I came on.
Let's do it.
People don't understand that Tether going for a premium or Bitcoin being sold for a premium is a really bad thing. It's bad for the space and it's bad for the people who are holding their crypto on an exchange that's forced to pay a premium. Because if you're forced to pay a premium, there's a reason you're paying a premium. That's it for investment advice from David Silver.
Yeah, it's probably gonna end badly. Well, so David, you were on our last episode. What are your thoughts about the whole Bitfinex? We didn't talk about this before we get to OneCoin. What are you like when the news broke of the New York AG going after Bitfinex? I mean, the way they laid out the story, everything about crypto capital and Panama and them getting arrested. You're not involved with this case. What are you thinking?
So I think that it's really interesting. And if you take a step back, and I've done 2 little like mini tweet storms about this, the 2 important things here are, one, this is not an argument or an investigation into what Bitfinex was originally claiming. This is completely separate from Tether being a fraud. That is not what this lawsuit is about. This
They got,
lawsuit is not saying
they got a different investigation for that going on.
that's a completely different investigation. That's my entire point here.
Which is happening.
Absolutely, it's happening. And when people are getting confused, they're like, oh my God, Bitfinex was wrong. This guy's been ranting and raving. No, they are actually taking, the New York's actually taking the position. We're going to assume for a moment that Tether is a legitimate stablecoin. We're going to assume for the moment that what a business in New York says publicly matters. And because the related companies did insider transactions, which to me, my favorite thing as a lawyer is these big fancy law firms are claiming that this was an arm's length transaction between Bitfinex and Tether. Yet the transaction signed by the same guy.
Yeah.
You know, it's impossible to be an arm's length transaction when your one arm is signing both sides of the document.
But one of the other things they said was that they took a month to deliberate on the transaction. It's like, what, the guy took a month to deliberate with himself? Like, yeah.
Exactly. It's the equivalent of me arguing with my 6-year-old. I am literally arguing with myself 40 plus years later. There's no, oh, they were arguing this was arm's length. This was bullshit. So there are two key points to this case. One, terms of service, changing them, how much does it matter? And Paul Vigna and I had a little exchange about this from the Wall Street Journal. They were like, Crypto Bitcoin magazine with 6 viewers published that the terms of service changed. And the Wall Street Journal then, when this lawsuit happened, they put it on the front page. Those two things are the same thing. Well, no, the Wall Street Journal is still a reputable source that gets to millions of people. I have no idea how many people read the Bitcoin magazine from Spokane, Washington. But no matter what, yes, they changed the terms of service. Yes, the terms of service said they can do what they did. But, and I think, a good lawyer, it's not going to be me until this all crashes. A good lawyer is going to be able to say, hey, here are the 1,000 times you swore this is the exact opposite of what Tether is. And now, because you changed your terms of service, because you lost somewhere between $500 and $1 billion, you changed your terms of service to say something else, that doesn't matter. You're just not allowed to do that without disclosing the other material factor being the stolen money. Now, only in crypto can Bitfinex turn around, and I still can't believe this is going to be true, turn around and raise $1 billion in an IEO and say, well, we lost this money. We told you we're going to get it back. But look, we're going to raise it again. And by the way, we're oversubscribed, so get your money in quick. Come on.
And this is not even the first time they're trying to raise on a token because they lost money.
I mean, this is like the definition. But I used to say, and I've been proven kind of wrong, but I think the theory still applies. I was a big believer that one of the reasons the original ICOs in 2016 and 2017, when things started shooting the moon, wasn't necessarily because there was new money coming in, but I believe that original OG crypto people with OG Bitcoin, that got like 10,000 Bitcoin at a time, they were washing their own money and diversifying their own interests by investing the Bitcoin and the ETH into the ICOs, because it was moving it one step further away from them in concentration. It was moving it one step further away from KYC on how they originally got the coins. And I believe what we're going to see here is insiders at Bitfinex who absolutely require Bitfinex to survive another year. They're going to simply inflate the value of Bitfinex tokens. Tether has, and I thought this was a great line by the lawyers, that Tether has an active interest in keeping Bitfinex afloat. No, Tether is a stable coin. It should have no active investment interest in anything. They should have a dollar for dollar pegged coin. That is the definition of a stable coin. I don't care if you change your terms of service. But they literally, in the reply brief that was filed on Cinco de Mayo on Sunday, their quote is that Tether has a keen interest in ensuring that Bitfinex can operate as normal. No, that is not what Tether's purpose is. Tether's purpose is completely separate and apart from that. So I do think that God bless New York, as probably, unlike Tone, as probably being the only one that was born and bred in New York, and as an actual like lifelong Jets, Islanders, Mets, and Knicks fan, I can say that God bless what New York's doing. I've been saying this publicly. I said in Bloomberg the other day. I said in a bunch of fancy media outlets. This is all about the discovery. So this is all about New York performing it, willing to. And this I find kind of funny. I forget whether it was Tim Swanson or Bitfinex, but one of the crypto skeptics like myself came out and said, Tether has been alleging for 2 or 3 years that they can't get a legitimate audit of their books and records. Here, New York is willing to do it for free, and they're saying, absolutely not. We will not give you our records. We will not do this for free. You're out of your mind.
Yeah.
Yeah, well, we're definitely going to find out how much of the money is there. They're now claiming 74%.
So they put in, and I buy that there is 74% of something backing up Tether at the moment. What that something is, I wouldn't bet my life on. But what I find interesting, they really have some problems, Tether moving forward, because now that they're an investment entity, I think they're shooting themselves in the foot. I think that future lawyers involved in this case are going to want to retract some of their earlier statements about how they're defending this case. I think it's one of the few things they have to do is to say that it's neither a security nor a commodity. But any real lawyer, well, I want to take that back because the Steptoe and Johnson and the Morgan Lewis guys are real lawyers. Any person in the space has to appreciate that this is where we're heading in 2020 and beyond. That a regulator is going to regulate this space. And to simply say we're above regulation, I think is a shitty argument.
And your thoughts on their middleman company, which has shadiness written all over it, Crypto Capital?
One of my earliest examples in crypto dealt with Centra and the Centra ICO. And I used to tell people, if you meet two guys in Miami who are driving Lamborghinis, who are living in their mother's apartment and just rented the penthouse in a fancy building, and they tell you that their company is run out of Moscow, Singapore, Zug, or Panama, and they tell you to invest money with them, run the other way. It is frankly mind-boggling. And this is where people are going to end up going to jail. That companies based in the US would give their money to a third-party shadow bank outside the US run by US citizens to the tune of $1 billion and not so much as have a written agreement with them. So I do think New York is smelling blood. I do think that they want to make an example of Bitfinex. I do think that they have Crypto Capital dead to rights. I think it's not surprising that this guy turned out to be a fraudster in his past life. But look, everyone's successful until they're not. Bernie Madoff was successful until he wasn't. There are a lot of crypto OG that are going down, and they're going down in the near future. Eric Voorhees was called the last cowboy. You know what the problem with being the last cowboy is? All the other cowboys are dead. If you're the last one standing, they're coming for you.
Speaking of Voorhees, Shapeshift's been kind of under the radar the last 6 months. I haven't heard much. I heard their plans to launch some useless token. I don't know whatever happened to that. Voorhees has me blocked on Twitter. Something I said.
Not.
I basically accused them of, the way I view Voorhees is and this is the big argument that Voorhees and I have. He's like, well, you're supposed to be nice to everyone in crypto. And my reply to him was, the way I was brought up, if you see something wrong happening around you, you say something. I guess he wasn't brought up that way. and everything is fine around him, and he doesn't see a single scam in the space. So that kind of got me blocked by Voorhees.
Well, it's funny because he doesn't block me, but he trolls me when I very rarely tweet directly at him. But when that article came out calling him the last cowboy, I was like, and then the following day or two, he then announced that they were laying off like a third of Shapeshift. I said something about, well, maybe he should take some of his, because he's like, well, I was like, maybe you should give some of your money to keep your staff and keep them employed, since you're such a libertarian and you think government and, bailouts are bad, why don't you give back some of your money? He's like, I haven't taken a single dollar in salary. And my response was, well, that's nice. You're a startup. How much equity do you have? Why don't you sell off some of your equity and keep some of your staff? And he's like, that's not the same. And I was like, it's really nice. Everyone's a libertarian and anti-government until they make some money. And I think Voorhees is being radio silent for the time being because he's right now in asset protection. He wants to make sure he doesn't go back to jail, and he wants to protect the assets he's accumulated.
I don't think Voorhees was ever in jail. That was Roger.
Voorhees got convicted. He's a convicted criminal.
I thought he got in trouble with Satoshi Dice and his punishment.
Yeah, they fined him for Satoshi Dice, and they fined him for the Ripple thing, I think. Oh, that might have been Roger as well. No, Voorhees got 2, but they were both like fines.
Okay, so he never had anything criminal.
Head of a security company, which Salt did an ICO.
So Salt, yeah, he was in trouble on the Salt thing, but he was like an advisor. He was never criminally charged.
Okay, so but Voorhees, the point still sticks. He's got a lot of money. He doesn't want to lose his money. He doesn't want to be hit by the SEC. He doesn't want to be hit by DOJ. He doesn't want to go to jail because he's never been to jail. Why would you want to go to jail if you've never been there? But crypto loans company Salt Lending, once associated with high-profile Eric Voorhees, is facing U.S. Securities and Exchange probe over its $50 million token sale. So I think that Eric is doing the same thing as Arthur Brightman. I think you haven't really seen Arthur and Kathleen spewing. We're rebels, we're anarchists, we don't care what the law is. They're all hiring the fanciest law firms, and suddenly they care about what the law is.
So not like Trayvon.
God bless Trayvon. Trayvon started up again. I haven't seen it. Has Trayvon been talking again?
I think he's got his YouTube channel up. I mean, he occasionally tweets about me, and it was funny because he thinks that teaching people how to trade is scammy.
No, I love him. He blocked me. But look, I mean, at the end of the day, there's a day of reckoning coming. I think New York, we're at the tip of the iceberg. The regulators are going to rush in now that New York has started. No one wants to be left out. There's a lot of talk that there's DOJ backing up what's going on with Bitfinex. I think I said this, Tone, at the end of your Unconfiscatable conference when it was like, what's like your one thought walking away? And my one thought was that the amount of fraud is going to shock the conscious when it comes into public light. I stand by that. I think the amount of fraud, the insider trading, the manipulation, all of this is going to shock the conscience when this all comes out in 2020.
Yeah, it's not going to shock me, but I think it will shock a lot of people.
I think it's going to be a lot of people who are defending this are going to say, "Oh, I'm surprised this happened." I only listened to Rand Neuner, whatever his name is. He was so positive. He would never lie. He would never pump and shill. No. Roger told me if I just switched all my money to Bitcoin Cash, it was the way to do it. Craig Wright told me he was Satoshi, and this is what the real Satoshi wanted to do.
Just pull up his initial quote there. That's such a nice way to start the lawsuit.
This one.
I told my partner that I really like the Crypto Wonderland for the Bitfinex, the Bitconnect case, but he couldn't come up with a good song. He's like, sometimes the truth is better than anything else.
Yeah.
But this is crazy. This is exactly, I mean, obviously OneCoin was earlier on, and this lawsuit is for the investors who are thinking that the regulators are going to do their job. We just want to make sure the investors get their money back in OneCoin. But look, this is really simple. They promised big returns at minimal risk, and the investment was based on a non-existent blockchain, a non-existent token, non-existent mining. I mean, this was a fraud of all frauds.
Mm-hmm.
And I hope at the end of the day, some of these companies are held accountable. We didn't sue the promoters in this case yet. My presumption is we'll eventually sue the promoters. They're listed in the complaint, but we started with the big dogs to start the case. I think the most interesting one is Mark Scott is a lawyer. He's made some interesting defenses about why he didn't do anything wrong. But his basic defense is we're allowed to steal money in crypto. And I don't think that's going to be a good defense moving forward.
Also, it's crypto, it's not money, so we can do whatever we want.
I just think, and Bitfinex kind of says the same thing. We are under no fiduciary obligation to protect our clients. Every lawsuit I do, everyone says the same thing. There's no fiduciary responsibility in crypto. There's no obligation to tell the truth. Anything you read on social media, you should assume is false.
Well, that was the original statement by, what's his name? Trendon Shavers to the SEC. Bitcoin's not money, so why are you contacting me?
Yeah.
Right?
I mean, he without a lawyer, God bless him.
He got a lawyer eventually who told him, no, you shouldn't have said that. But that was his initial reply to the SEC.
I'm not sure Trey ever lawyered up.
What do you mean?
Last I heard, he defaulted.
No, David. I'm talking about Trendon Shavers. I'm going back
to Trey.
James. I'm talking about Bitcoin Savings and Trust back in 13, 14, where his initial reply to the SEC was, Bitcoin's not money, what's your problem?
And look, he hired a great lawyer to do that, a lawyer we all love. To the point that when you and I met in 16, you like booed me off the stage for loving on Trendon a little bit. He was like my first I want to say he was my first press release.
Right. So that was the wrong thing to say back then, and it's an even worse thing to say now.
I think he's out of jail though. I think he's out of jail living somewhere. He owes me $14 million though. So I got a judgment that's going to chase him for the rest of his life.
Oh boy.
But think about this though. Trendon could be sitting down. He very well could be one of the richest people in the United States right now.
He could have walked away with 84,000 Bitcoin before he ever did anything wrong.
And I'm saying, I think he's still sitting on 20 to 30,000 Bitcoin. Spend a year and a half in jail and have 20,000 Bitcoin right now?
I don't know. I don't know about that. I think Jason advised them against trying something like that.
I don't know, man. One day it's gonna be like, I'm gonna be like an old Sean Connery walking out with my hat, my trench coat. I'm gonna walk onto some yacht. Trendon's gonna be there. I'll be like, Trendon, judgment's worth $100 million. I'll take the boat. I hope he does something right or something well.
But I got to run here. I didn't realize it was already 4:00, so I'll catch the replay on this OneCoin stuff. But I find it very interesting, and I'm glad someone's holding people accountable here. So David.
Well, I just have one question. I just have one question for David. But thank you, Sasha. Any final words?
Oh, nothing major, I guess. Yeah. Thanks, Tom.
Awesome. Thank you so much for joining us again. And so Silver, one question for you. Did your firm go looking for this case, or did it like fall in your lap? Because in OneCoin, we all knew this was a scam forever.
So OneCoin's a little bit different than the other lawsuits because of the criminal action that's going on. I was contacted. I originally passed on doing the lawsuit, and then I decided at the end that we might as well the people hadn't been paid back yet. The the government's locked up some of the money, that it's time to get the investors their money back. So I spoke to a couple of clients who were looking, and finally I filed on behalf of one of them. My presumption is within the next couple of weeks, there will be a couple of copycat lawsuits filed, and then we'll see how it goes from there. But it's really interesting. They claim to have raised about $4 billion, but one of the defenses is only 3% of that was in the United States. So there are a lot of people overseas who lost a lot of money in this. Mm-hmm. But I personally never believe anyone when they say, some of these numbers in this case are just absolutely insane. But what's nice is because this case was so early on that you'll end up seeing a lot of text messages and a lot of stuff that's just comical to read.
Oh yeah, no, I'm sure. I remember, and I was in just last year. We were in Riga, Latvia for the Honey Badger conference, and I was getting a cup of coffee with another crypto guy, one of my followers, and like 2 tables down, there was like people talking about crypto, and I'm like, oh, let me stand up and see what's going on. And I walked over, and it was like a retired kind of guy, and that he was talking, and then some woman who was a few years younger than him, but she was probably in her 50s. He was probably in his 60s, and she's like selling him on OneCoin.
It's crazy. Think about the concept of how many people between OneCoin and BitConnect threw in $5,000-$10,000. This is like, all these people running for president who are like, all of our money, we can only get into donations of $5, $10, and $20. All of this money was basically lost on like $10,000 of the clip, because even the money from overseas, it's incredible how many people got caught up in this. But we're going to see, this is going to be another one where, if you scroll down to the color images that are in there, it's a couple of pages down.
Yeah, I thought I saw something like that.
The color images just show like how much they were lying, but you got to remember when it was in the US and they were promoting it a lot of the companies they said they were associated with and what was going on, they knew that eye candy was all that matters. This stuff looks good.
Oh yeah, no, their deck looked great, but it's like no different than all these other money. Oh my God. When are people ever going to learn about multi-level marketing?
No, never, ever, ever. See, you're not married with kids yet. Wait till you're married with kids. Every single housewife is thinks they're going to become rich by selling Rodan and Fields. Then when they get fat, they're going to sell you a shake to lose the weight. And then you realize, you look at people and you're like, no, you're never going to be rich. One way to make money, you can either inherit it or earn it. So I guess that's 2 ways to make money.
No, that's a great point.
Yeah, so here's the list. I haven't sued the promoters yet, but trust me, a lot of these people are going to end up getting sued in the next month or two.
What's the order of this thing?
There's no particular order. These are the people we've identified as people who were promoting.
Oh, interesting.
I'm chuckling. One of the comments is telling me I need the shakes myself. It's so true. I'm so fat. Like I was doing so well. I wasn't looking tone good, but I was looking David good. And then when I haven't been in the gym in like 2 weeks, I played basketball. My back's a pretzel. I'm getting freaking. But yeah, so like those people, a bunch of them are going to get sued next. There's going to be a lot of interesting people who made and lost a lot of money, and they're going to have. This is going to be because OneCoin's a little older than the others. I did steal the money, but the money is now worth nothing. Am I guilty for the value that I stole at, or am I guilty for the valuation today?
Oh boy. Yeah, this is gonna be interesting. All right. Anything else you want to talk about? We haven't. There weren't really that many new stories other than the whole Bitfinex thing, and we're revisiting the security law thing.
No, I mean, I think we're pretty good. Ultimately, at the end of the day, with consensus next week, I say we do a live show in the bathroom somewhere. Any place you buy me a scotch, I'm willing to show up for a live show.
I think maybe about 5 people got that joke. I should upload that video from the law show that started it all, filmed in the men's bathroom in Miami.
Exactly. How I became a fan. But yeah, I mean, I think we're going to be relatively quiet. I expect something. I don't think the government's going to come out the week everyone's in New York, but I can tell you that the SEC is booked solid with whistleblowers giving testimony during consensus.
Oh, interesting. That's interesting. People are going to be in town anyway. Might as well talk to the SEC.
The SEC is very smart. Every year, it was actually, I swear, I met Valerie for the first time was last year at Consensus. Was when I had a client go in and basically spend an afternoon just going through every piece of shit ICO offering. But yeah, that's it. Everybody, have a good day. I'm going to go back to doing a little work, take a phone call or two. I'll see you next week. And now we got to get Jason. Jason hasn't been on lately. With no one fighting, need him and Bill to be fighting each other.
I know. We'll get him on. Drew hasn't been on here in a while either. We'll try again.
Well, Drew got a real job again. I mean, the life of a professor is only so good when crypto is going up. You got to go take a real job at Carlton Fields now.
Yeah, that's right. I have that article. I was going to pull it up if he was going to come on. All right, yeah, we'll get them on again. Are you coming here for Consensus? Are you going to be here?
I'm speaking at Consensus.
You're a speaker. Oh, yeah.
Me and Turpin are talking about crypto fraud and cell phone hacking just off the main stage.
Oh, that's right. Hey, did I pull up that story about the guy got like 10 years in prison for cell phone hacking?
Valedictorian of his high school. Went from valedictorian to jail for cell phone hacking. But they had a picture that wasn't public. I mean, look at me. I'm wearing a Gap t-shirt and like ripped jeans that are acid washed from the mid 80s. He was wearing a Gucci outfit. My wife was like, "You can't understand how expensive." No, it wasn't Gucci. It was Louis Vuitton. So he had a Louis Vuitton like sweatpant outfit, Louis Vuitton luggage, Louis Vuitton sneakers. She's like, his belt is worth more than your entire outfit. I said, that's why he's going to jail. So that's it.
Great. I'll see you at Consensus.
See you next week, man.
Yep. Later, man. Thanks for joining.